a half point more than experts had predicted. So joining us right now to talk about that is CBS News business analyst Jill Schlesinger. And let's talk about this. We're talking about what happened and what to expect in the coming months. So Jill, good morning. Thank you so much for being here. Let's dive right in. I know this is a big topic of conversation for so many people these days. Why did the Federal Reserve decide to cut by a half point, not a quarter of a point?
You know, Chair Powell said that when prices surged after COVID, the primary focus of the Federal Reserve was to bring down inflation, obviously, right? But now the inflation rate has cooled, and that high interest rate is sort of cooling off the whole economy. And I think that the Fed basically decided that policymakers, they had to shift their focus to that job market. They said they wanted to get a, quote, good, strong start with a half a percentage point. They want to foster an economy that would prevent any deterioration of the labor market.
Okay, so let's think to the future now and look ahead. What did the Fed say about future rate cuts?
You know, by the way, the Fed is not infallible. These are just projections. They said that they anticipate a total of another half of a percentage point by the end of this year, and then maybe another 1.5% to 2% over the course of the following 2 years. Now, all this being said, nothing's set in stone. If the economy starts to wobble, the Fed's going to front load those rate cuts. They're going to push down interest rates much more quickly. But if inflation pops back up or kind of stays high a little bit longer, they might go slower. So we really are trusting them to be data dependent.
So, Jill, how does this affect the overall economy? We're thinking about, housing prices and just maybe credit card bills, but obviously groceries and just, going to get your car filled up with a tank of gas. Does the Feds see any recession, or do we possibly see a recession anytime soon?
So kind of two separate questions. I'm going to do the easy one first. The Fed was asked point blank. Federal Reserve Chair Powell said they don't see a recession anytime soon. The other part of the question is that people are going to feel this in different ways. I mean, we talk about, well, it's just the first of many rate cuts. So you're going to start to see, hopefully, the interest rate on those outstanding credit card balances go down. Auto loans, they'll start to drop a little bit. Mortgages, they're not directly controlled by the Fed, but they're coming down slowly but surely. None of this is going to make you feel like we're going back to the time when the Fed kept interest rates at zero. In fact, Powell said, you know what, we're not going back there. That was an emergency and that was a bad time. So if you think you're going to get a chance to refinance at 3%, not going to happen, unless, of course, there's a catastrophe, and we don't want that.
No, we don't want that. But this definitely puts it in perspective, and it's very helpful. Jill, thank you for that. You can catch Jill regularly on CBS Mornings and the CBS Evening News with Nora O'Donnell. For more analysis, always go to jillonmoney.com.